Now for our feature interview of the show. I'm telling you, I am thrilled to have on the line with us Raoul Pal. He's talking to us from Grand Cayman. The reason he's talking to us is because he founded this service 4 or 5 years ago called Real Vision. Somehow I became a founding subscriber to this service, and I have been absolutely amazed at not only the quality of the service that I get, a research service, but the amount of content. It just keeps growing and growing and growing. And the neat thing is it's practically free. It's kind of, what do they call it? Netflix on demand. In other words, you go get it when you want it. We're going to talk about that today. Raoul, thank you for being with us this morning.
Well, thank you. It's great to be here.
Well, you're in Grand Cayman. At least our weather's starting to get a little more like the Cayman weather. You are the CEO and the co-founder of Real Vision. Tell us, I'm saying it started about 4 or 5 years ago. Give us a quick, how did it get started and why?
Yeah, so a bit of my background. I was at Goldman Sachs running the hedge fund sales business in equities and equity derivatives. I then went on to manage a global macro hedge fund. So I've been at the epicenter of the financial industry, and I opted out of the rat race back in 2005 and moved to the Mediterranean coast of Spain to start writing macroeconomic research for my publication, The Global Macro Investor. While I was in Spain, I met a neighbor of mine in this small fishing village, another English guy, and he'd done a similar journey to myself and opted out of the rat race, and he was in the advertising business, and he'd sold an advertising agency, and he was now consulting publishers and publishing companies, book publishing, music industry, and all sorts of other people. Very smart guy, Damien Horner. And we got chatting about the state of the world and what had happened to Spotify and how it destroyed the music industry. And then we were talking about the publishing industry and how they were terrified of the digital revolution that was coming. And again, this was early. This is back in maybe 2005, 2006. And, we were both very interested, me from a macro perspective on the big changes that the digital disruption was bringing to the world, and Damien from the marketing and the media side of things. And then another thing happened. A friend of mine was running the largest television company in the UK at the time, and he came, and as ever in Spain, over a glass of wine, we were chatting, and he said, Raoul, something weird has just happened. It's something called YouTube, and I have a feeling this is going to destroy the entire television industry because we have to pay £100 million or whatever it was for a broadcasting license, and instead, anybody could enter it. And that put my spider sense up, and I thought, okay, this is interesting. Then I kind of kept that aside, and then during the financial crisis, 2008, I was one of the people who'd been writing about it. I knew it was coming, but people like my parents' friends would come to me and say, why didn't we know about this? And that sat really uncomfortably with me. Why didn't the ordinary person know about what was coming? Why did just the people at the heart of the financial system know? And I realized the problem was that the media had let people down. They were so busy cheerleading, using 3-minute sound bites, and basically presenting it as sports broadcasting where it's based around adrenaline-pumping action, as opposed to it's people's life savings. It matters. And I put that piece of information together with all of that I'd learned about what had happened to the television industry and what was happening to the media industry overall. And then it was a dinner with my partner, Grant Williams, who became one of the co-founders. He'd started making videos, and the penny dropped, and we said, you know what, we could start a television company or a video-on-demand company as the world now has evolved from broadcast television. And so stupidly, we decided to do that. We obviously had no idea what we were doing, but we thought we can bring a different way of doing things. So as opposed to 3-minute sound bites, advertising, and all of that nonsense, we said what people actually need is intelligent analysis and access to the very best minds in the world. So I went to my Rolodex and reached out to a bunch of my pretty famous hedge fund friends, people like Kyle Bass, and said, Carl, will you come on this and spend an hour of your time talking about your career, how you do things, how you manage risk, the opportunities you see, and anything that's on your mind? And he said, God, I'd love to. We never get an opportunity to do this. And so it launched. And we launched with that basic premise that we could bring the smartest people in the world to the average investor. And then it kind of exploded from there, as you know. And it grew into something that we're now 65 people in 3 or 4 different countries around the world with subscribers in over 100 countries. And we're rolling forward into the television business as we go on to Apple TV now. We're launching Roku next week, Amazon, and all of the platforms that you'd expect. and we move into the full TV space. So it's a hugely exciting thing.
Yeah, the pieces have really come together, and the growth has been explosive. What you offer every single week just grows and grows. Different segments, different time frames. From
we've now got I don't know, 10 different shows, from immersive storytelling pieces on the ground in India showing what's going on, to shorter, snappier, actionable trade ideas to help people find the best ideas to make money with, to we've even done documentaries, and we've got documentaries on PBS. So we've got this huge breadth of programming, and the content library is now over 1,000 videos in the library of all of the legends of finance and the really important financial themes that matter, usually well ahead of when the other media start talking about them. When they become news, we actually try and anticipate the news.
So you are the up-to-date Netflix for traders. Do you feel like that's a good metaphor for what you're doing?
Yeah, absolutely. But we're not just for traders, we're for investors. Our client base is everything from students wanting to learn what the real world of finance and economics is all about, to, the retired person who wants to invest their savings. We have a lot of professionals on the platform, some of the world's most famous asset management firms, hedge funds, and almost everybody in the middle. So it's an extraordinary broad group that we've appealed to, which was by luck. I think it was because we didn't do dry programming. We made it immersive, engaging, interesting, and different, that people just thought, wow, okay, this is something entirely new.
Well, Raoul, since I became a subscriber, as I say, 4 or 5 years ago, I know I've watched hundreds of hours of videos with some people that I would have never had access to otherwise, got some insight into why they think what they think. But let me tell our listeners right now how they can have a look at this. And do not go www. Just go to your browser and enter tv.realvision.com. And I'll repeat that a couple of times, tv.realvision.com. And the cost is the astonishing thing. It's $180 a year. Now, that's $180 US. That makes it about 4,000 Canadian or something. Well, what is it, Drew? About 3.25 Canadian, whatever. It's $15 a month. Come on. I am telling you, you've been listening to me on this show for years. I'm telling you, please have a look at this. This is the best thing I've seen in my 45-year career in terms of delivering financial information from some of the smartest guys out there in the world that RTV can get. People that I would not normally have a conversation with, get to hear what they're thinking about, and it is great. Have a look at it. Okay, hi, everybody. We're back. Drew and I sitting here with Raoul down in Grand Cayman. Raoul, again, thank you so much for taking the time to visit with us. We just talked about, and I love how excited you are about it, about what you've done with RTV, and I've recommended as hard as I can to our listeners, please go have a look at this. Oh, and by the way, you sign up for it. What did I say? $180 a year is what it costs. You sign up.
And there's a free trial.
Yeah, exactly.
There's a free trial.
You get 2 weeks for free, and if you really don't like it, you just say, nah, I'm out of here, and it doesn't cost you anything. So before we took the break, Raoul, we're talking about, we wanted to ask you what your thoughts are on some of the major markets. Let me throw it to Drew here, and he can start you off with one.
Yeah, being up here in Canada, Raoul, what do you think about the U.S. dollar, Canadian dollar? That's always a big one for our listeners.
Yeah, listen, I am very bullish on the US dollar right now against all currencies, including the Canadian dollar. I think overall, the US dollar, because of a number of things, from the interest rate differentials between the US and the rest of the world, the dollar funding crisis, i.e. there's not enough dollars out there for the amount of the $15 trillion of debt that foreigners have in the US, and with rates going up, and with a number of other issues going on, trade tariffs, reducing the amount of dollars in the system, I think there is a risk of the dollar rising dramatically, and it should do so against the Canadian dollar as well.
Okay, and just so everybody's clear, you are a macro trader, so this isn't going to happen in the next 2 weeks, 3 weeks. You're looking longer term. Can you just touch on your time frame for us a little?
Yes, you're at the rare moment where my short-term, medium-term, medium-term match. So I think it's going right now, and I think it will continue potentially into into next year, and the move could be relatively violent to the upside for the US dollar. So it's that rare moment where my macro view is my exact view now.
And Raoul, I've been saying to our listeners here for the past couple of months, talking about what I call the stealth strength of the U.S. dollar as it shows up in emerging currencies around the world, maybe not so much against the euro. I mean, I remember going through 2017, where the euro kept climbing and climbing against the U.S. dollar. And I'll tell you, that was frustrating for me. I just couldn't get my mind around why anybody would want to swap out a perfectly good U.S. dollars and take euros in exchange. But now that's behind us. But I thought one of the drivers really was the interest rate differential. In other words, you just got a lot more interest on your money in U.S. dollars than in American dollars, than in euros. So that touches on the other macro theme here, interest rates. Now, I know you and Julian, one of the fellows I watch on RTV, when the two of you are together, have different views, but what do you think is in the future for interest rates?
So I think my macro timing is exactly aligning with my bigger picture timing, my long-term framework as well, is I think 10-year interest rates in the US, for example, reached the downtrend for the last 30 years and reversed. So I think the chances are that bond yields actually fall over time, even as the Fed continues to raise interest rates for a while longer. The reason they're falling is because the dollar's rising and that dampens inflation. And additionally, we're quite late cycle and the yield curve is flattening, meaning that the market is discounting economic weakness and lower inflation in the future. And I think that narrative will shift soon towards weak growth, much like this same kind of play out happened in 2000, where we had a very strong quarter. Looks like we're having a strong quarter in the US now, and then before you know it, growth evaporates. It feels a bit like that to me. So I think that interest rates in the US, the long end, i.e. the bond market, interest rates fall from here right now, and the short end may go up further as the Fed hikes a couple more times and goes a little too far and eventually pushes the U.S. economy towards a recession in 2018-19.
Okay, and if that's the U.S. interest rates, we've just had a big change in the ECB. They're going to slow their bond purchases to a stop at the end of this year. What do you see over there? And again, is that going to continue to drive the U.S. dollar view that you have?
Look, Europe's a little bit complicated because of the issues with Italy. We don't know how that plays out. Spain and a number of countries, and then a long number of entities like Deutsche Bank, who almost require state support right now. So I fear that if the ECB even tries to stop buying bonds, and don't forget, they bought pretty much all of the Italian treasuries that have been issued, that before you know it, you blow up the peripheral bond spreads for these weaker nations in Europe. So I'm not entirely convinced the ECB can do it, and so I don't think interest rates will rise. And I think as they try and do that, it creates a panic into German bonds, driving European bond yields lower over time. So bond yields go lower, and Italian and Spanish bonds end up going higher in yield as people change their risk profile in case the ECB is not there to buy those bonds any longer.
Raoul, we always run out of time on this, so we've got just a couple of minutes. The stock market, we got the NASDAQ 100 printing all-time highs. U.S. stock market generally pretty strong here. Have you got a view one way or the other?
Look, the stock market for me is a function of the business cycle. We are late cycle, but we've yet to see economic weakness. I do think the market probably trades lower for a bit. I think it's going to be more volatile for the time being. But as soon as that economic weakness comes, which, as I've said, I'm expecting because of the US dollar, because of what's happening with interest rates and where we are in the cycle, the chances are that the next 20% in the stock market is down as opposed to up. Or if it is up, it'll be a sharp spike and then a reverse. Mm-hmm. So I think we're very late cycle, and people need to be very cautious with allocating too much to equities right now.
So if people are into the stock market on a lot of leverage, you'd be saying get a little more defensive, get cautious?
Yeah, just don't be taking so much risk. It's probably the most over-owned stock market in history. People are very strongly positioned long in the market, and I think there is a risk that things could reverse, and that risk is pretty high. So in which case, I would use this strength just to start getting out of what you can and making sure that you're in a comfortable position if there is a market pullback.
Raoul, I just want to say thank you very much. I mean, this has been just a tiny little taste of what is going to be available, what is available, what's coming available on Real Vision. Again, we want to tell all of our viewers, tv.realvision.com is where they can go. It's all about better information, better timing, and really getting it out there to everybody that wants to hear it.
That's incredibly kind of you.
We truly appreciate you coming on. As I say, I've been looking at it for 4 or 5 years now. Remind our listeners here, it's $180 a year. You sign up at the site. You have 2 weeks free access to everything that's on the site. And if you really don't like it, you can just say, okay, I'm out, and it costs you nothing. Take a look at it. This is a great service. Raoul, I know it's probably getting hot and uncomfortable down there in the Caymans, but thank you again very much for taking this time with us this morning.
I really enjoyed it. Thank you ever so much, both of you.